What is up, everyone? Michael here. Welcome to my YouTube channel. And in this video, let's talk about some of the trades that we have taken this week, posted in the Discord group, and we will break it down. So if you're not in my Discord group, there's a link in the description below. You can join for free. I also have a paid membership if you want those signals every time I enter a trade. So looking at our Discord group right here, basically every time I enter a trade, I post in the signal group, and you can see yesterday we caught some banger trades before and after NFP on gold and on Nasdaq. And if you can see on our respective channels, I also show you some of the trades here as well on the position that I've taken. And if you missed our giveaway, I am doing more giveaways coming soon. And last giveaway, I was giving away Apex accounts, and I will continue doing so. So if you're interested, you can join my Discord. And also a big shout out to one of our paid members passing their TPT evals, reaching $9,000. Congratulations. All right, so let's get into our charts over here. Let's look at gold. So gold before NFP, we had a position the day before. This was pretty interesting, taking liquidity. This was pretty classic actually. Take liquidity, inverse fair value gap, enter on the break, and then we got on this long here just because our bias was long. So that was one of the positions. But bringing you to yesterday, prior NFP, we were on gold. After NFP, we didn't really trade gold, even though it was pumping and there were opportunities, but I was actually on Nasdaq during that time. But over here is where we actually started the day, because on this pump here, I wanted to do a reversal, but I got in a little bit early, and then I took my small profit, scalped it, and got out. But if people were to hold, it actually went down pretty far. So that was not the best trade, because we're counter trending right here if we want to take a profit and just get out as soon as possible. But I was looking for a buy, and where I got in on the buy was over here on this tap on our POC. We got in, and then TP was hit. This was a nice around 70 pips over here. So again, confluence, here is the New York session POC. This is the aftermarket Asian session. I drew a fixed volume profile, and then it bounced right here, and with this consolidation, order block, liquidity grab, this was a pretty good position to get in. Pretty safe too, in my opinion. And then when NFP news came, we had this pump, but I didn't want to chase it, and I don't know how far it's going to come down. Ideally, I do wanted to see it come down further, but it never did. It came around this area, acting as a support. Of course, with this pullback on this other next leg up down, this was actually a good area to get in. As you can see, order block rejection off this demand zone, and then it just went up. So that was gold yesterday, but with Nasdaq, it was actually pretty interesting because there was multiple positions, I should say, that looked very clean. One was NFP. So NFP, we don't want to chase. Of course, some people will gamble with their accounts and just do a buy stop, sell stop just to pass their evals. But when you trade funded, you have to be very careful and select your trades very specifically, right? So what I did was I saw this pump up. I waited for a pullback, and this pullback was right into 618. This was actually the position that we got into, and got into a long on NQ. And then afterwards, NVIDIA started dropping. But we have this 15-minute range. So after 15 minutes, right, there's different ways to increase your win percentage with the open range trade, which is the 15-minute candle. We can draw the 15-minute highs and lows, and then once you get to that 15-minute then go into the 5-minute and look for a candle body break. So once we saw this candle body break over here, right? This candle body break on the 5-minute, then we can look for our positions. But in this case, we have this bottom wick, top wick. We took it on the flip of the this 5-minute candle flip from bullish to bearish because we have some range. So basically take liquidity, push down all the way to fill this wick over here, right? This wick. So we took that sell down. Now, we didn't hold, but we waited until a support was being formed. And we look to the left side, we can see that we had some consolidation over here, right? And then right here is basically liquidity grab. Liquidity grab rejection. And then if you draw your fixed volume profile in this range, let's see what we see. So basically in this area, we broke below the high volume node and then rejected right above this POC. And then we had some consolidations, rejection in this area as well. So this rejection was one of the criterias. And then we saw this bullish pump up. A lot of people would have gotten hurt on this drop here. I did do a small scalp on this area. Got in, got out. But this was too quick. I didn't post it as a signal. But this area, rejection, was where we got in with this POC and consolidation area. Now, if you look on the higher time frame, it's actually much clearer, right? So you can see we had this order block here, this order block over here. You can draw that all the way over, and then on the 1 hour, we can see this hourly flip and then this candle going up. And then always look to the left side to see what kind of price action we have in this area. So if you drew your support right here, right? So from resistance turn support, we came back right here, took liquidity as well, and then had a flip. This area is clean range. That's why we had a really, really massive fall right through the clean area, and then we had a rejection down here. So that's just reading price action. Of course, when you're actually on the chart, it's a little different, but if you see price action and patterns often, you can recognize. And the key thing is just to be patient, because seeing this drop is really hard not to enter. But if you zoom out and look at the higher time frame, there's really no reason for you to catch this falling knife. Now, once we had this bullish candle on the 1 hour, then we can go ahead and see if we can get in on the long, right? But again, on the left side, we can see clean range. We don't want to get in there. And then we have this inverse fair value gap here, right? So at least wait for it to tap and then wait for the aftermath and then react to it. So that is what you should be doing. You don't have to be preemptive in getting into positions. Just react to what you're seeing, because whatever fundamentals or news, it will reflect on price. Now, there are indicators. Most of the indicators I use is volume based. If you use other indicators, it's usually lagging and then you may miss the move. So it's always good just to look at candles or footprint chart or even book map, just to see where the orders are sitting. All right. So that's it for this video. Hope you enjoy this, and I will talk to you on the next one. Take care.